Hey, Kama Moseley. I'm so excited to have you with me today. Thank you so much for joining.
Thank you, Julie, for having me. I know you and I are both excited to finally get to do this together.
I know. And as we were speaking before, we've already had many of these types of conversations before. And so, but I think it would actually be beneficial for our audience to hear some of our conversations back and forth that we have, right? About hypothetical situations that some of our clients are dealing with and that we've come across over the years of being in this industry, as well as honestly the type of market that we're in at the moment. We're seeing things that we haven't normally seen before in the past. And so I would love to just get right into it and give you some hypotheticals and get some ideas from you about how you've handled things in the past. So first off, let's talk about the elephant in the room, and let's talk about catastrophes and homeowners. And, you know, some of our clients are buying and purchasing these luxury homes in, of course, what are elite areas geographically, but happen to be high risk for wildfires or hurricanes. How do our clients consider, you know, buying these things, and what are the risks of the climate that they're approaching that we need to really give some recommendations and some guidance on?
You know, Julie, it's so interesting as we were touching base yesterday and talking a bit. We talk about wildfires in California, but quite frankly, we've got wildfires in a lot of parts of the country. We've got huge hurricanes that we had, the last two really large ones that came through Florida and obviously hit so much of that southeastern part of the United States. And it feels like so much of the country is now under catastrophic warnings. Even I live in Kansas City in the Midwest, the convective storms are doing a ton of damage with hail and wind and flooding. And so I think what I am saying to my clients oftentimes is it's really important to think about, you know, where you're going to buy a home. So one of the tips we always give our clients is call your broker and do a zip code check. Understand where you're buying. Are you even insurable in that area you're buying in? And if you are insurable, what's it going to cost? We had a client who had a home in Montana. It was costing them $30,000 a year. It had gone up to $300,000 a year. So they ended up selling the home. The new buyers who bought the home, after they bought the home, found out they were going to be paying $600,000 a year. I mean, these numbers sound incredible, but they're real. I mean, people are really experiencing this. So having that zip code check and really understanding where you're buying, what that is going to look like with regard to paying for the insurance. And then, of course, thinking about how you're going to mitigate that risk.
And you know what? We're actually very fortunate at Alliant Private Client because we have our risk mitigation people, right? We have 2 full-time risk mitigation people that they will go out to certain properties and give advice, or they'll have a phone conversation with clients and say, listen, you need to be, you know, aware of this, or, you know, you might want to do this before the carrier comes out and they're going to require it, but we're just highly suggesting that you do this, right? So we actually have in-house people being an advocate for our clients when it comes to that kind of thing. So we're actually very fortunate. We have such great resources internally that don't cost our clients anything, right? I mean, what an amazing resource. What an amazing resource. So a lot of our clients, and really good clients, mind you, right? Like clients that haven't had claims, that haven't, you know, aren't in high risk areas, they're getting non-renewed, right? I mean, you and I have both had these types of conversations with clients that they are long-standing clients with no claims, and they are getting notices of non-renewals from their insurance companies. I mean, how do you emphasize the unique risks tied to households, you know, and the non-renewals and things that our clients are in good standing, but yet are getting these notices that are pretty, you know, they're not nice notices, and they say they can be pretty scary. So how are you addressing that with your clients?
It is very alarming and very scary. And again, having that broker partner that can step up and say, hey, don't worry, we're going to remarket. We're going to find a solution for you. You know, continue to put risk mitigation devices in your homes when you're told to do so. And even when you're not told to do so, Do not file small claims. Really save it for those catastrophic events. If you have questions about the claims, call your broker. Don't go straight to the carrier. That automatically opens a claim. So there's so many different things that again, we can do as long as we're being education forward to help our clients understand why they might be getting non-renewed, but also how to help them from getting non-renewed.
Well, and honestly, some of the insurance companies, to your point, are just exiting certain areas. And honestly, it could be in an area that it's really important for us to actually tell our clients, it's nothing that you did.
Right.
You know, it's almost like that saying, it's not you, it's me, right?
It's exactly right.
You know, it's not
exactly
you, it's the insurance company. But we'll actually, you know, find another solution for you. I mean, and that's the benefit and of being an independent agent, right? We work with lots of different insurance companies that we can actually have options for our clients where you go to, you know, certain carriers and that's the only option they have, where we're very fortunate that we actually have options for our clients. So
absolutely.
So a lot of our clients have domestic employees or they have family offices that have domestic employees, right? And I know that there's you know, a lot of things that maybe we can suggest and for them to just kind of be aware of more so of anything and the coverages that they might not know are out there or things that they should be considering when they are, you know, hiring a domestic employee. And by domestic employee, I mean housekeepers or chefs or personal trainers or, you know, maintenance crew or whatever, drivers, personal drivers, right? So what kind of coverages or things would you recommend our clients really kind of looking into when they're actually hiring employees?
Yeah. So there's a lot of things to think about here. I am thinking about liability and I'm also thinking about safety, right? So when you're having someone come into your home, certainly background checks are just an easy no-brainer, something to keep your family safe. And with our high net worth carriers that we work with, many of them, depending on the program, will offer several free background checks a year. So that's a great no-brainer. But another way is really, I'm thinking about liability and I'm thinking about the reason why it's so important for everybody to have an umbrella and to have the right umbrella with the right coverages on that umbrella. And what happens is, you know, that umbrella protects your family, right? If something happens in your home, it's not that staff member that's been with you for 30 years who's going to sue you. It's their attorney.
It's not necessarily, to your point, not necessarily that person. It could be somebody associated with them. The other point is with the EPLI coverage, the employment practices liability, that's key. I mean, people think, oh, you know, yeah, it will cover you in the event that there's a wrongful termination or allegations of, you know, discrimination,
right?
Sexual harassment. You know, I mean, if anybody has a nanny or honestly anyone, they really need to be thinking about that kind of thing because that is the type of thing in this day and age that can come back and, really be an issue in your insurance program and your investments or your net worth. Okay, so one more, and then we're going to wrap it up here. Let's talk about classic cars and vintage cars, right?
Okay, let's do it.
Let's do it. We have clients that have, I don't want to necessarily say a fleet of vehicles, but there could be, but really some nice vehicles and maybe vintage or antique cars that actually, that they're using and they're transporting to parades or to car shows or to different events. What do you say or how do you place the coverage for those types of vehicles? Because they're different than our regular, Monday through Friday cars, right? Our regular day-to-day cars. So what makes it different and where would we go and what things to consider for that kind of stuff?
Yeah, absolutely. And I think this is, again, where making sure that you're with a broker who can offer, right, the high net worth carriers or even the collector car carriers and that really understand that how to insure things that aren't just, again, your daily drivers when you're exhibiting them, when you're transporting them, and really these high dollar cars as well, just being able to understand how to place the insurance.
So for instance, if they're taking their cars on a regular basis, and they're going to, be driving them in parades, or they're going to be doing, some insurance companies exclude that type of exposure, right? They
Absolutely.
don't want them to be doing that. And so as soon as they, or, the high performance vehicles, they put them on a racetrack because it's fun, right?
Oh,
That kind of stuff is completely excluded. And as soon as you hit hit the parade route, or you hit that racetrack, coverage is no longer available, and it's null and void, right?
Yeah, great point.
The other thing is that, a lot of people, even on our day-to-day vehicles, if there's any customization, sometimes in the event of a total loss, they aren't taking that into consideration with some of these insurance companies. You need, to your point, you need to be with the right insurance company, because they will cover customization. They will cover, all the bells and whistles that you add aftermarket. And so it's those types of things that some insurance companies are not going to cover. And that's when there's a claim, that's the last time, or the least of the times, that you want to actually find out that you don't have coverage for something.
One little, just the most simple thing is just the difference between agreed value and actual cash value, right? So when you have agreed value, if the car is worth $150,000 and it's, totaled, you will get that $150,000. Whereas actual cash value, which a lot of carriers, especially in the standard market, they'll depreciate the car.
And honestly, it's like some insurance companies really don't know how to settle a claim with either a high-valued vehicle, high-performance vehicle, or a vintage or antique car. They don't know. I mean, you can't get necessarily a 1969 Ford F-100 engine anymore, right? So you need to have, be with a company that's actually going to have those connections and those resources to be able to rebuild the car the way that you want it rebuilt in the event that there's a claim. So honestly, I think that we've kind of touched on a little bit of everything. I think, if there's anything that you have, any other additional, thoughts that you have.
Thank you so much for having me, Julie. And I think that my last little parting words would just be, again, this landscape in private risk, private client insurance is really changed over the years. And it's just gotten quite complex. And there's a lot of areas where I would say there's landmines. And if you don't have the right partner to really help you navigate through those landmines and really understand the lay of the land, it can be very challenging. And so again, I would just reiterate that, because oftentimes I think personal insurance sort of isn't always at the top of everybody's radar, and they may not understand how complex and challenging the landscape has become.
And how exposed that they really truly are.
Agreed.
Yep, exactly.
Agreed.
Thanks. Thank you, girl.
Julie.
Appreciate it.
So fun. Good to talk to you.